I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome to the show, Gary.
Thanks, Jim.
The stock market, kind of interesting. We had that horrible drop for the first 2 months of the year, but a terrific rally afterwards. Is that rally going to continue?
I think it is. The tools that I use a lot of cycle analysis, are telling me that drop in January and that bottom in February was a 7-year cycle low. That's a multi-year cycle, the largest cycle in the stock market. And I think that's why this rally out of that bottom was so powerful, is because we were coming out of a multi-year cycle low. We made it all the way up to test the November high, that last intermediate high, and then we've gotten a little pullback. The market needed to take a breather there. Probably wasn't going to go through that major resistance zone on the first try. And I know a lot of people are anticipating that that we're in a bear market, and that top was that we were topping in a bear market rally, and we were going to head back down. But I think the odds of that are virtually zero. We were never going to start a bear market. The 7-year cycle was just much too right translated. By that, I mean it just rallied way too long. So we didn't have enough time on the tail end of the cycle to have a bear market. So from my work anyway, this was always just going to be a correction, not a bear, a new multi-year bear market. It's just going to be a correction, and I'm pretty sure that correction is over. So we've taken a little breather here, and I think we've now completed this daily cycle low, and we're starting back up again. And I think this leg over, let's say, between now and, I'm going to say the middle of June, we're probably going to at least test the all-time highs in the S&P. And then I would expect the market will get a little nervous a week or two ahead of the vote on whether Britain's going to exit the EU or not. So another corrected move at that point. And then I'm thinking one more rally into August as we'll get some kind of relief rally after we get through that vote. One more rally to probably make new all-time highs, and then we'll get a deeper correction. But I don't think we're going to go back below those February lows any time in the next 4 or 5 years.
Really, that dip was big enough to prevent what a lot of people thought would happen this year, and that's a collapse of the market.
Yeah, and we needed that. The market had rallied very strongly for 6 years, and so we needed a deeper, more sustained correction to cleanse that bullish sentiment and then kind of reset the market so we could get this final leg up, which I think will probably turn into a bubble, maybe around 2018 to 2020, somewhere in there. But, basically the same thing that happened in 98. We needed a really strong correction to get everybody on the wrong side of the market, everybody, thinking that we're going to repeat 2009, which we are not going to do, especially not 7 years after the last one. We're just not going to make that mistake again. But we did need to have a very deep correction to get everybody bearish, get everybody on the wrong side of the market, and then that sets the stage for the next leg up.
Wow. Because so many people are still saying, you haven't seen anything yet. It's going to be worse than the 1930s. Are they just feeling something bad, a gut feeling, or do the statistics and analytics support that?
Well, what it is people just have, they remember what happened in 2009, and they're expecting it to happen again, and it's just not going to. So the pattern for the last 16 years is that central banks keep interest rates too low, too long, and print too much money, and then they create a bubble or a series of bubbles. So the first bubble, of course, was in 2000 with tech, And then we've got, basically we went through the pattern, printed too much money, kept interest rates too low. Then we got a housing bubble, which when it burst led to a bubble in commodity markets, especially energy. And so we have the big bear market, and then they, repeat the pattern, more printing, more low interest rates, hold them there too long. So now I think we're in the period where we create the next series of bubbles, which I think the first one will probably be in the stock market. And then when that bubble pops, I think the next bubble will be in the commodity markets again, but this time I think it will focus in the precious metals rather than the energy markets.
Gary, you got to see up close and personal the real estate bubble in the U.S. burst. How do you think things are going to turn out in Vancouver and Toronto, where housing prices are up a tremendous amount of money over 1 year, from 25 to 28%?
Well, that's typically what you see at the top of a bubble. Everybody becomes convinced that this is the norm and that prices are never going to go back down, and that's about the time you get the last buyer comes in and buys, and then there's nobody left to buy, and price has to come down. So whenever you think this time is different, I guarantee you it's not.
Wow, because we're seeing people camp out to line up to buy townhouses here in the Vancouver area. And I wonder, are they just wasting their time and money?
Yeah, I would say they are. It's not going to end well for those people.
Unless you plan to live there forever.
Even then, you're going to have a period where you're going to be deeply underwater in your house, and that's what we had in the United States, and that caused a lot of people to just walk away from their house, and that was severely damaging to the financial system. So, I guess Canadians didn't learn the lesson from the United States, and they're going to have to repeat the mistake themselves.
Well, the people selling their houses, though, 5,000 home sales in the Vancouver area 2 months ago, nearly that last month. After a while, don't they just run out of houses to buy?
Well, I think what you run out of is people to buy. When prices just get so obscenely high, nobody can afford them anymore, and then, like I said, the last buyer buys, and then price has nowhere to go but down.
It's almost like
generally the same in every bubble.
Yeah, almost like a pyramid scheme.
Correct.
We'll have more with Gary Savage right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Gary Savage. Gary, how is the U.S. dollar doing right now?
Well, Jim, when we talked last time, I said I was kind of expecting the dollar to go down and break the August low, but to not really get any follow-through to the downside and then bounce for a month or two. And as of today, anyway, it looks like that's probably playing out. So, we just got a little too oversold. Sentiment got a little too bearish. Nobody could envision any scenario where the dollar could rally, and that's a sign that you're running out of sellers, and then you need a counter trend move to clear that sentiment and then clear the oversold conditions. So I'm going to say we're probably going to bounce for maybe 4 to 8 weeks in the dollar. I do not expect it to make a new high above 100. And then I think the next leg down, when it starts, I think will be that's when we really start to get the move to the downside. But for the next few weeks, we're probably going to rally in the dollar. I would say at least until the vote on Britain exiting the EU. That the euro has to drop ahead of that vote, and I think it's already begun. So I would say dollar rally, euro drop until I believe it's the 23rd of June, and then I expect the cyclical trends to resume, and the dollar will continue down, and the euro will go back up.
How nervous would you be if you were in Britain right now facing a vote like that?
Well, I don't really expect them to exit. It would be very disruptive. So I I really doubt that. I think there's probably much ado about nothing. I don't really expect they will exit.
How is gold going to do over the next while?
Well, at the moment, we've kind of hit the exact opposite of the dollar. Sentiment got too bullish on gold. It got extremely overbought. And so gold is trading inversely to the dollar. So I suspect that gold is going to need to take a breather, and it'll probably correct for the next 5, 6, 7 weeks as the dollar rallies. And that will cleanse that bullish sentiment and then set the stage for the next leg up. So I do not expect gold to make lower lows. I don't even think we're going to get close to those December lows. But I do expect we're going to have a pretty significant and drawn-out correction over the next month, maybe month and a half. So I would say a little patience with the gold market right now. Don't be in any big rush to jump back in just yet. I wouldn't expect the bottom until the middle to latter part of June. It'd be my best guess.
So hold off buying gold right now.
Yeah, just a little patience here. There's what happens is when you get a big move like what we had in gold, and then you get a correction, people are very anxious to get on board and repeat that move. But the thing is that markets don't tend to work that way. When you get a big aggressive trending move, it usually takes either a big correction to reset that market, or you have to go sideways for a long time. And at the peak last week, the miners were stretched 75% above the 200-day moving average, and that is the biggest stretch above the mean that sector has seen in the last 16 years. So that kind of move is not going to repeat quickly unless we get a very sharp correction first, or we get a long sideways move to let the 200-day moving average give it some time to catch up to price. So, I know that human nature, you see the big move, you get a little correction, and you get back in ready for the move to repeat. That's just not the way markets work. They take a little longer. So, I'm going to say some patience for at least a month and a half, maybe 2 months.
Would it be a good idea then to just hold on to whatever gold you have and not make any moves?
Well, what I've suggested for my subscribers is there are a lot of people that have just taken what I called an old turkey position. That's where you just buy your position. You're going to hold it for the next 4 or 5 years. But during these intermediate corrections, it gets kind of tough to hold on. Human emotions take over, and you get scared, and a lot of times you end up selling at the bottom of that correction. So a few days ago, I suggested people that were holding those long-term positions so that they could move their trade into a capital gains tax rate as opposed to an earned income tax rate, that maybe they wanted to start hedging those positions and hold those hedges for a month or two while gold corrects, and then once we get that cycle low, you could sell the hedges, and that would help you to weather that corrective move and hopefully not sell at the very bottom.
What are you looking at with crude oil prices?
I think crude oil still has a ways to go yet. I think the last time we talked, I went on a limb and I said I thought this intermediate cycle would at least test $60 before we have a larger correction, and I'm going to stand by that. I don't think we're done yet, not by a ways. I'm not really expecting this intermediate rally to top until sometime later in the summer. Of course, we'll have corrective moves along the way, but the larger intermediate cycle, I think, is probably still advancing and probably will be till July or August.
The giant forest fire that forced the evacuation of Fort McMurray also is going to impact oil prices, I would think. The oil production facilities themselves weren't hit, but all their workers, of course, had to flee the city. So their production's down 40%. That's 1 million barrels a day. And I thought the world had a surplus of about 1 million barrels a day. Well, that puts us at break even, doesn't it?
Yeah, it's been my contention that the markets always anticipate. And so, while it doesn't look like the fundamentals have changed yet, I suspect, a couple of years from now, we'll look back and we'll see that the fundamentals were already changing. And the world economies were going to start to accelerate again with all this stimulus from governments, and a lot of production came offline during that crash, production that's not going to come back online quickly and easily. So I suspect by later in the year, and especially next year, we're probably going to have fairly tight inventories, and we'll look back and we'll say, oh, the market was already anticipating this a year ago.
I know consumers enjoy lower gasoline prices when the price of oil falls, but we're seeing how when that happens, how much it impacts the economy.
Yeah, it does, and I'm afraid when we get the next series of bubbles, oil will probably go back above $100, $150, and that's one of the things that causes recession. So, I'm going to enjoy the low oil prices while they're here, because I don't think they're going to last for the next 3 or 4 years.
It looks like, though, some companies that rely on oil aren't putting all their eggs in one basket. Enbridge Pipelines has a 50% share now in 3 French farm mills, and they paid $282 million for it. So sustainable energy still will always be on the table, won't it?
Yeah, I think it will. We need to convert to a better system, because eventually the world's going to run out of oil. So I think this was a wake-up call here over the last decade that we really do need to start updating our energy sources and not be quite so dependent on one source.
Well, we did see 400,000 people put in a $1,000 option to buy a Tesla 3. Maybe the writing is on the wall.
It looks like it, huh?
Of course, they'll never meet their production deadlines. Apparently, they feel that's a good marketing tool, because it makes their workers work harder to try to meet these impossible deadlines. Mark Cuban, the owner of the Dallas Mavericks basketball club, commented on Donald Trump, saying when Trump first started his campaign, don't listen to what he says, listen to how he says it. But now he's calling Trump the Seinfeld candidate. He's about nothing. What kind of a...
I'm not a big political guy. I hate them all the same. In my opinion, they're all the same. It's just who they cater to get their votes. But I don't know any other system that has any more benefits than the one we have now. But it's just one of the evils that we have to endure every 4 years. We have to go through this nonsense.
Yeah, Churchill probably said it best. Democracy is a horrible form of government. However, we haven't found anything better yet.
That's my feeling exactly.
Gary, thank you very much for chatting with us.
You're welcome, Jim. Had a great time. Thanks.
My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.